Singapore is drawing in money right now. And I'm not saying that as a cool travel statement, I'm saying it as a banking reality that is already changing the rules for international clients. Because when a financial hub gets flooded with capital, banks don't become more welcoming, they become more selective. They raise minimum deposits, they tighten onboarding, they start screening harder, and they quietly push out smaller clients if he's smaller means $300,000, $500,000. I'm Matteo Maglia, Partnership Manager at GloboBanks, the banking introduction company for international accounts. And in today's video, I want to explain what's happening in Singapore banking right now, why it matters if you're an international entrepreneur, and how to position yourself so you don't get trapped in the typical cycle. Open an account, policies change, minimum deposit increase, accounts become unsuitable, and you scramble again. Because the biggest mistake people make is thinking Singapore is stable, so any Singapore bank is automatically a safe choice. No, Singapore is stable, but banks inside Singapore have different strategies. And if you choose the wrong type of bank, you might still be safe on paper, while your banking relationship become a headache in real life. Let me start with the headline. The Singapore banking shift. What's actually changing? Well, over the last years, Singapore has become one of the biggest magnets on earth for international money. Family offices, investors, global entrepreneurs, people relocating, people diversifying out of Europe, out of certain Asian regions, or out of high surveillance jurisdictions. Singapore is a vacuum, and when a place becomes a vacuum, banks get spoiled, meaning they don't need to compete for customers anymore. They compete for the best customers. So what happens? Minimum deposit expectation go up, and what used to be normal starts being treated like low tier. I've had a conversation in the market where certain local banks basically won't even look at you unless you bring multi-million level relationships. And even where that's not the official rule, it becomes the unofficial reality. So if you're watching this video thinking, I don't need a bank account in Singapore, I just need a safe place for money, you're already missing the point. A banking relationship is not only about where the money sits, it's about how often rules change, how the bank treats international clients, whether they understand non-local structures, how service works when you're not physically there, and how quickly you can resolve issues when something happens. There are two categories of banks in Singapore, and now I want to simplify this in a way you can actually use. In Singapore, you generally have two categories of banks. You will see international people trying to open. The category number one, local champions that are the famous domestic banks, extremely stable, extremely respected, massive presence locally. The problem is not the stability. The problem is that as they get flooded with capital, they can become more and more selective, especially with clients who don't match the profile they want. They are built around the local market first. So over time, what you see is minimum deposits creeping up, internal policies tightening, and less tolerance for non-standard international profiles. Category number two, global international institutions operating in Singapore that are banks that are already built to deal with global clients across many jurisdictions. So their logic is different. They don't only think Singapore market, they think global client base. And that difference matters more than people realize. Because if a bank is global, by design, it's less likely to suddenly become nationalistic or local only in its standards. It already has the systems, it already has the compliance structure, it already has international clients handling as part of its DNA. So, when you hear someone say Singapore is the safest banking hub, the real question is which type of bank are you actually choosing inside Singapore? The hidden trap is stability doesn't equal predictability. This is where the most people get confused. They think safe means no problems, but in banking, the real killer is not the banking failing. The real killer is compliance friction, frozen operations, sudden policy changes, request you can't satisfy quickly, and service that doesn't match your lifestyle. If you're an international entrepreneur, you're usually traveling, managing multiple jurisdictions, receiving international payments, moving funds, paying vendors, paying taxes in one place and earning in another, or running a structure that's not local salary plus local bills. So your risk is not will the bank collapse. Your risk is will this relationship remain usable when rules thicken? And Singapore right now is the perfect example of a place where the system is stable, but banking gatekeeping is intensifying. So let's talk practical. If you choose a local Singapore bank, you might be getting a great name locally, great stability, but also increasing chances that the bank will upgrade its client profile over time. The meaning is that today they might accept a certain deposit. In 12-24 months, they want more. And they can do it because they're flooded with demand. Now, compare that to a global bank operating in Singapore. A global bank might say, we already have high-end clients in other markets. In Singapore, we can still build a wider base because we can handle the scale. That's a totally different strategy. It means lower probability for sudden drastic shifts, better international service culture, often better understanding of non-local residency realities, and there's a second advantage people forget. If you're based in one country and your Singapore bank is purely local, you're fully dependent on that one jurisdiction's way of doing things. But if the bank is global and has presence in multiple hubs, you often have more flexibility in support, escalation, and service structure. Now, not always, but the logic is international banks tend to have more international client machinery. The service reality who actually knows how to handle international clients. Here's the uncomfortable truth. A bank can be rich and stable and still have a mediocre service for international clients because service quality is cultural. Some institutions are used to handling local clients, local expectations, local documentation norms. And when you come in as a, for example, UAE resident with a company elsewhere, with global invoices, with international transfers, with a structure that isn't standard employment, you're not risky, you're just not standard. And banks don't like not standard, unless they are built for it. So, when someone tells you open a Singapore account, any bank, what they're missing is the difference between banks that are international by design versus banks that are international by location. Singapore location doesn't magically make every bank international needed. The pattern you need to understand: minimum deposits rise fast in hot money hubs. This is not only Singapore. This is a pattern you will see in any hub that becomes trendy for capital. When money flows in fast, banks starts doing what they call client profile inflation. Today, 30k deposit looks fine. Later, 250,000 becomes the new normal. Then, well, we prefer 500k. Then we prefer 1 million relationships. And here's the key. This is not personal, it's not even bad, it's just market dynamics. But if you're a business owner, you need to anticipate it, because if you open your core banking setup in a place where inflation of requirements is happening faster and you choose a bank most likely to fake them, you're building on a foundation that moves under your feet. So what should you do if you're considering Singapore? Let's make it practical. If you're considering Singapore for diversification, stability, access to top-tier financial hub, or as a part of a broader international setup, well, here's the strategy mindset. Don't choose by brand name alone. A famous local bank can still be the wrong fit for your profile. Choose predictability over hype. The best bank is not the one everyone talks about. It's the one that keeps working smoothly with the market titans. Think in bank types, not only bank countries. Singapore is a country, but your real decision is local champion versus global institution in Singapore. Think ahead 24 months. Ask yourself, if requirements tighten, will I still qualify comfortably? Avoid going direct if you don't know the internal rules, because Singapore is a hub, yes, but it's also a place where banks can blacklist you internally if you approve wrong, present the wrong story, or trigger the wrong compliance flags. You don't want to learn by rejection. The bigger issue is people copy-paste all the offshore playbooks into 2026. And this is where this ties into what's coming next year. A lot of entrepreneurs are still behaving like it's 2018. They think, I'll just open accounts easily. I'll just try a few banks. If one rejects me, I'll go to another. That era is ending. 2026 is going to amplify three things: stricter onboarding, faster the banking decisions, and higher minimum expectations in premium apps. So the people who win are the ones who stop treating banking like an app download and start treating it like a relationship plus a strategy plus a long-term structure. This is exactly why GloboBanks exists. We are not a banker, we are a banking introduction company. The meaning is that we work through relationships and formal channels with institutions, and we help internal clients approach the right bank in the right way based on residency, business model, transaction flows, risk profile, and what the bank actually wants today, not what a random blog post says. Especially in apps like Singapore, where the market changes quickly and deposit expectation can shift hard, because the difference between easy onboarding and months of wasted time is usually not your money, it's their approach, it's how you present the story, it's how you match the right bank, it's how you avoid unnecessary red flags, and it's how you don't burn your name with blind applications. Quick reality check. Do I need Singapore? Let me also say something important. Not everyone needs Singapore. Some people are attracted to it because it sounds elite, but the correct move is not Singapore because of Singapore. The correct move is Singapore because it fits my goals. If your goal is operational banking for day-to-day payments, maybe Singapore is not the first move. If your goal is long-term stability, diversification, access to a global financial hub, and a place that is respected internationally, then Singapore can be a strong part of the setup. But only if you choose the right bank type and do it correctly. Here's the headline to remember. Singapore is stable, but Singapore banking is tightening. So don't treat it like a safe place. Treat it like a high demand market where banks can afford to say no. And in high demand markets, the winners are prepared, correctly positioned, and introduced the right way. If you want, my team can analyze your situation and tell you if Singapore makes sense for you, and if yes, well, the most realistic route is based on your residency, your business, and your numbers. You'll find the link in the description, and if you want me to keep doing these weekly banking updates with real strategic breakdowns, not generic news, subscribe, because 2026 is going to be the year where banking gets more selective, not less, and I'd rather you be early than desperate. Let's see in the next video.